Welcome to a taster of an Irish payroll training course. We are CIPP and CIPD certified international payroll trainers based in the UK. We offer both audio and virtual training at a competitive price. After this preview, should you wish to learn more about Irish payroll processes and technicalities, don't hesitate to contact us. Training outlines. Read the disclaimer. Our learning objectives. An example of training course content. Our international payroll processing steps. Payroll is the compensation a business pay to its employees for a set period and on a given date. The payroll process can include tracking hours worked for employees, calculating pay, and distributing payments via direct deposit or check. Pre-payroll activities. A written statement will include the business name, employee's name, job title and description, and start date. Also, it should include an employee's pay, hours of work, holiday entitlement, employee's location of work, collective agreement, notice period, pensions, a guide on how to complain about disciplinary and dismissal decision, the period of the stay, currency of the pay period, any additional pay and benefits, terms relating to employees returning from extra work. Terms of contract. The employment contract includes a written statement of employment rights, responsibilities, duties employer provides to an employee within 2 months of the start of employment. If the employee is working abroad, then the written statement includes the following information in addition to what's included in the written statement of the employee working in the UK. Types of employment status. Employee who works under an employment contract, self-employed and contractor, who runs a business for oneself, takes responsibilities for its success and failure. A director who runs limited companies on behalf of shareholders. An office holder who is a company director, board member, trustee. A court or employment tribunal will make a decision on the employment status. Payroll calculation example of a 40 years single employee earning €45,000 per year, contributing 5% towards pensions. Tax is calculated at 20 and 40% minus monthly tax credit due. Please note that pension contributions are deducted before tax, but not before USC and PRSR. The value of the tax credit is deducted from the gross income tax to work out the overall income tax for the year. An example of a 40 years married employee with 2 incomes earning €70,000 per year and contributing 5% towards pensions. Tax is calculated at 20 and 40% minus monthly tax credit due. Tax credit is €5,100 with zero tax allowance. The employee has a full medical card. Note that the tax allowance is deducted from the salary before working out the tax the employee owns, in effect reducing the tax bill at the marginal rate. If an employee is in possession of a full medical card, including a Health Amendment Act card, such may reduce the amount of universal social charge they have to pay. Payroll should only be used for full medical when making reduction. Other cards such as GP visit cards are not sufficient. Year-end payroll task. To view preliminary end-of-year statement, go to your account on the Revenue website and click on Review Your Tax link in the Pay As You Earn services. Click the appropriate tax year and request a statement of liability. This is a preliminary calculation only. It will show if you have paid the correct amount of tax and universal social charge for the year. It is based on information held on Revenue's records. The preliminary end-of-year statement for 2021 will include pandemic unemployment payment from the Department of Social Protection. USC is a tax payable on your total income. Depending on the circumstances, you pay USC at the standard rate or the reduced rate. If your total income exceeds €13,000, you pay USC on your full income. There is no relief from USC for employee pension contributions. It is important to note that the income tax and universal social charge due on the exercise of the share option is known as relevant tax on share options, RTSO. The employee must pay IT and USC at the higher rate, and the employer must also pay related social insurance using the rate of the PRSI class applied to you for the tax year. The tax return deadline for 2022 for income earned in 2021 outside the payroll are set at above. For income earned in 2021, the required date to submit both return and payment is no later than 1st of October 2022. In certain circumstances, employers can apply for quarterly, 3-monthly, or biannual filings. See the key dates. In Ireland, an employer will deduct PRSI, which will be allocated to the Social Insurance Fund. These payments may give an employee entitlements to benefits such as job seekers' benefits, illness benefits, state pensions, and so on. Also, as part of the Persian modernisation, P45s and P60s have been abolished and replaced with an online system. Since 2019, employees no longer need to get a P45 when they leave a job. Instead, the employer will enter their leaving date and details of the final pay deduction into Revenue's online system for direct revenue processing. In Ireland, an employer will pay from their monthly salaries tax called Universal Social Charge, or USC, if the income was more than $13,000. As shown in previous slides, the tax year is January 1st to December 31st. An employee can go back 4 years for a tax refund. The average Irish tax refund is €1,076. Also good to note is that employees in Ireland are usually taxed in the pay-as-you-earn tax system. How much tax they pay usually depends on what they earn and is charged on the basis of the employee's gross income. Further information on Irish payroll management and training, call or email us. Thank you very much for your business.